All right, I'm gonna go ahead and get this started. Thanks again, everyone who popped out tonight, getting some education on Thursday night, late night, right? Y'all could be out doing whatever you want, but instead you're here getting some learning in. For that, I applaud you. Like I said before, we're going to go over some XAU, what I'm looking for, our narrative as far as what's been developing over the past few weeks, past few months. We're going to talk about a certain long trade that was available today, how we can begin to spot it ourselves, right? It's going to be the same behavior like I was talking about before as we saw on GJ yesterday, the same type of narrative um, setup, right? That system that we can get into, those set of rules, 1, 2, 3, once it's hit, right? You're in and you're out. We're also going to talk about some Bitcoin and ETH, my personal narrative as well as setups, and then we're going to talk about news, why I personally don't trade fundamentals, but I do believe they are important. And we're also going to talk about session times for those that were having questions about that. So we'll get into the session times towards the end, as well as the news. I want to kind of get into the charts first, right? Talk about what we're looking for. So we're going to go ahead and go over to Bitcoin and ETH first, and we'll get that done on the crypto side. So let's go ahead and go do some analysis, take a look at what we're looking at for Bitcoin and ETH, and understand our narrative. So on our last stream, right, on Tuesday, we talked about this demand zone that was created on higher time frames. So let's go ahead and take a look at that, right? That daily push to the upside, right? Still holding our bullish structure, still holding those higher lows, higher highs, right? So we see that continuation after we come into those zones of demand that sponsored that move up, right? We talked about these imbalances as well as this liquidity that was available, right? All these equal lows. Remember, we have a bullish narrative. So whenever we are looking to enter a trade, right, do not get in early as institutional traders, so we can enter where the big money is entering, right? Where the composite operator is entering. We are looking for that liquidation, right, of those early longs or shorts. In this case, early longs, right, because we are looking on the bullish end. So we want to see a liquidation rate to the downside, right, followed by a demand mitigation, a break of structure, so then we can see that continuation to the upside and look to then catch trades off of that. So understanding ETH, right? We talked about our range we created. We talked about premium and discount. We talked about the price action that could possibly happen within. Now, the other day, right, we were at this point in time where we saw the supply zone. We talked about the supply zone, how we broke structure to the downside, came up, mitigated that candle, and then continued and liquidated those lows, right? And then we were talking about the demand zone here, and we said, okay, if we break structure to the upside, right, on the 15-minute or the hourly 15-minute double breaker structure, right, shows us that impulsive move to the upside, then we can look to enter trades and continue that bullish narrative because we are looking for the liquidity to the upside. That is what we are seeking due to the structure and the narrative that we are in, right? If we are looking to short, right? A lot of uninformed retail, a lot of people who try to will something in their direction, right, are looking at ETH and are automatically going, look at all this space to the downside, right? Look at all of this space to the downside, and look at this, right? They're like, look at these lows right here, right? Super clean trend line, whatever it is, they have something drawn, and they say there's a lot of lows right here. We can see all these equal lows right here. We should come for them, right? Why is price not coming for them? We're in supply. This high caused a new low, right? Why is price not coming for them? Well, because our structure is still bullish, right? So our narrative is going to be to the upside, and the liquidity is going to be seeked to the upside. That is where price is going to deliver for that liquidity. So when we are looking to take profits, we can then pair liquidity, right, with our structural narrative as far as supply and demand and where we can look to take this trade, right? So in this instance, the liquidity that is being created once this high was formed, right, is this high up here, because look at this, right? You have a complete large displacement candle to the downside on the hourly. Does it break our overall trend? No, it does not. Remember, it just puts in a higher low, right? We see the liquidation rate to the downside, break of structure to the upside, mitigation, and then that continuation, right? Everything we've talked about, everything we look about or look for when we are coming into these areas. Now, when we came into this area, right, our structural narrative was showing still that bullish structure. Were we leaving highs and rating lows? Yes, we were, right? When we came down into this area, we left these highs right here. We can see all of these equal highs. So remember, our narrative is bullish. So if we have our equal highs, right, we are looking to continue to seek those. And if they are structure points, right, then we can notice those breaks of structures and look for these big moves like this and start to expect this type of price action after a mitigation and a liquidation rate, right? Because if we're in this trade at this point in time, even if you have everything up into this point and you end up getting stopped out because price comes up here, right, and redistributes and continues to the downside, we still had our entire narrative to the point. And what were we doing, or what were we talking about before in last stream, right? The continuation, that theory where we are looking for the same side of the market until we are proven wrong, right? Based off of what the market is giving us, I'm only going to be with the trend, only going to be trading the trend. If I'm not trading the trend, right, then I'm going to get burned. I'm going to will stuff into my thought process, right, into my mind, into existence that is simply not there, and then I get burned. I think my style isn't working, right? I get in all these types of situations to where you don't know what you're looking at, but it's all the same thing, right? If you're following your rules, if you understand the structure and where price is going to deliver, right, then it's going to do that every single time. There is no need to get discouraged about certain trades or not even knowing what's happening, right? Because we are looking for the 1, 2, 3 method, right? Those impulse to the upside or the downside, those breaker structures with displacement, right? Showing us that volume into the market, showing us price wants to move that way. We are looking for what caused that, right? We are looking for the confirmation of that. And then we can then target that most recent week high or week low that was created. That is simply it, right? A 1, 2, 3 little step method where we can just be done with it, right? So understanding what this means as far as liquidity goes, we're talking about all of these lows right here where that uninformed money is trying to short, right? Once they see this displacement candle to the downside, what does that automatically do? Everybody who got in shorts, whether it's breakout traders, smart money traders, right? Quote unquote smart money traders up in these areas trying to take it to the downside, if they got this trade, great, right? We talked about how we had the objective from here to here, this liquidity from our overall bullish structure. Now, once price came down, showed this displacement, right? So let me go ahead and show you this now. We get a lot of short traders getting in trades, right? Here, 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 all the way down, trying to take Ethereum to zero, right? Whatever it is. Where's the most obvious spot that they're going to place their high? If you are a retail trader, right, trying to get into any trades like this, let me just go ahead and take all these away but one. I have no idea why I did that. Well, let's go back to ETH real quick. My fault, guys. But if we're looking at this, right, understanding that everyone was shorting that move to the downside. So let me go ahead and get rid of all these for you guys. My fault. But everyone is shorting this move to the downside, right? If you are a retail trader, where's the most obvious spot if you are emotionally trading that you are going to place your high, right? Or so your stop loss, right? At the high, right? At the most external high. Let's just look at this and understand, if I'm an emotionally manipulated trader, right? I trade based off of emotions. I trade based off of quote unquote gravity because I think price is just going to keep going, right? I'm going to get in these situations to where I'm like, there's no way it goes past this high, right? That's the highest high that caused this lowest low. So there's no way it gets past this, right? So all the liquidity is now present up within this range over these highs. What retail believes, right? Protected highs. What happens? They get liquidated, right? Because our overall structure is still bullish. So understanding where the objectives are and saying, okay, I was in this trade here, right? I took it to the downside and I'm out at the liquidity because this is a counter trend trade, right? That is a completely fine trade. Everything still showed up as far as the steps, right? And what we are looking for. But we can't force these ideas on ourselves because this gives us stress, right? We don't have everything up until this point to enter a short and target these lows here or even these lows here. Or we could be looking at this as some type of Wyckoff, right? If someone's looking at this saying, okay, preliminary supply, right? Buyer's climax, you have your sign of weakness, and then we come up, create a UTAD, and we're going to distribute right here, right? It doesn't work like that. We need our confirmations, more than one, and we can use that, right, for the ability to then get in trades. Because even if we have that quote unquote Wyckoff or accurate charts or drawings or anything like this, right, what is it really going to matter if we are not profitable? We could be sitting there drawing labels all day, right? But will it help us in the end if we don't understand what we are looking at? No, it's not going to. So let's talk about ETH's range that we are currently in right now. So we saw that move to the downside, liquidation rate to the upside, break of structure, and then that markup, that continuation to the upside, right, into those highs. So now that we are in this current range right here, let's talk about what we are doing, what we are expecting, right? So if we go on our higher time frames, we can see that this was a little rally-based rally that had occurred, so we can understand some type of demand within this area, right? It caused that move above these highs. We can see we consolidated and then broke above these highs. This is a 4-hour chart, right? So we are closing over these highs with 4-hour candles, highs that cause new lows, as well as we have a lot of liquidity available right here. And then we have an institutional candle right area that we had liquidated as well. Price came up into this area, mitigated this supply zone, right, from this high that caused a new low. And then we are starting to see some type of reaction. Now, what would we want to look for within this point in time to get into some short trades, right? What do we want to see either way? We want to see that impulse, right, after a mitigation of that supply zone or demand zone for that confirmation within that zone, right, to then end up taking these trades. When I see price come into this area, wick it like this, right, and then we look at the lower time frames and we're looking at this price action here. Let's go to the 15-minute. Does this look very strong to you, right? Does it show that displacement to the downside to you? Is it breaking structure with force, right? Not really, right? We're looking at these candles and we're not seeing a lot of displacement. I'm not seeing anything that really broke a low that caused a new high with force, right? With that volume, with something we want to see. But what instead do we see, right? That overall bullish narrative that we are still creating, price liquidating lows, mitigating old demand, right? From lows that cause new highs. And then we see more breaks of structures from highs that cause new lows, right? So I'm still looking at this as overall bullish structure that we are creating with Ethereum, right? Especially Bitcoin, same exact story, right? Same exact narrative, pretty much the same exact chart. But until I am proven wrong from my bullish bias that we have been in from a bullish trend, I'm not going to be looking for shorts, right? I will gladly miss the move. I'll gladly miss a 2% move because I know within price action like this, I can make 20 to 30 R, right? Done for the week. That's all we need to do. Instead of trying to will certain instances into play, because that's all only going to cause stress, right? Only going to cause anxiety. You're going to be staring at the charts and you're not going to want to be in any trades anymore. It's what causes people to quit, right? It's the emotional game. That's why 90% of traders fail, is because of their emotions, right? They can't get that mental discipline down to say, I'm only looking for one thing and one thing only. Anybody can press long or short. Anyone can do that. I could go give that to my grandma, right? She could press long or short and hit some crazy, crazy lottery play, and then all of a sudden she is the biggest person on Twitter, right? What does that really do, though? Did she learn anything? Yeah. Or no, she did not, right? The only thing she learned, right, was that she got a lot of money from this, but does she know how to handle it, right? We talk about lottery ticket winners who go broke, right? Most of them go broke. Why? Because they don't know how to manage that money. So if we can manage our money, right, and manage our risk, only look for the same thing over and over again, then we can get into trades, successful trades, walk away from the chart, and be done, right? So we talked about ETH. We'll talk about Bitcoin as well, right? That same exact narrative that I was talking about before. We're talking about the highs as well as structure, but let's go ahead and take a look at Bitcoin now. All right, I had this drawn, right? I was looking for some type of sell-side liquidity rate as well as sell-side build-up within this price action to see Bitcoin to come to the downside at this point in time. So I'm going to go ahead and get rid of this because this obviously did not end up going the way I was looking for. But understanding our overall structure, right? Again, we broke structure to the upside, came down and mitigated that demand, and then we saw that continuation. This high caused an internal low, break a structure to the upside, price comes in, fills that fair value gap, right? And then we see more highs being created. We're still closing over highs, and we are continuing bullish on the higher time frames at this point in time, right? So understanding now our 4-hour structure, we just looked at our daily. We have a low right here, right, after a liquidation rate to the downside and that fair value gap fill, that break of structure to the upside, the demand zone that was created from that. Right, that candle before candle, we're on the 4-hour chart. We can see price then raids lows again after breaking more structure to the upside, right? What are we doing? Liquidating lows. Remember, it's that same behavior, liquidating lows, leaving highs. We're bullish. We're looking for lows to get liquidated, and we're looking for highs to get left, and we're looking for structure to be our way. Lows get liquidated, highs are left. What happens? Highs are taken out. More shorts get in this trade, right? Double top, whatever it is. More shorts get in this trade. Price goes to the downside. They all put their stop losses over these highs. Price comes back up, creates more highs, right? So we have more shorts getting in trades right here, thinking it's triple top, right? It's going to continue to the downside, whatever it is. But we know that we have the break of structure upside. What's good, Joe? And then we have the demand zone that was created from that, right? The liquidation rate, and then the break of structure and continuation. So we are still looking for that same narrative. It's literally just higher high, higher low, continuation. That's it, right? After that liquidation rate, and then we see that continuation from that. So looking at our most recent structure now from Bitcoin, we can see we ran the highs, showed a market structure break to the downside at this point in time. We came back and mitigated that hourly candle that broke that structure point to the downside. We can see that drop base drop right here, right? That base, lower time frame redistribution. So let's go ahead and show you that accumulation to then distribution, right? We created sell side liquidity, ran the highs, and then broke structure to the downside, right? Here's your displacement candle that was formed, candle before that candle. It's within this area, right? And then we see that mitigation and continuation to the downside. Now we still need to remember this is all internal structure. We had this low marked right here, right, from that demand zone that caused this move up, but this is still all internal structure until we violate, right, that higher time frame low after that liquidation rate and break of structure to the upside, another low that caused a high within this range right here. So if I'm looking for Bitcoin shorts, right, I'm looking for some type of displacement underneath demand zones that cause new highs, right? This is the most recent demand zone that caused a new high. I'm looking for price to create, right, buy side liquidity, raid that, create supply, and then create that displacement to break to the downside if I am going to short. But right now, right, our narrative is still bullish, so we can still look for those continuations to the upside if it is given to us, right? So on our 4-hour chart, low that caused a new high. We're currently within that demand zone. Let's go ahead and take a look at the hourly. You can see we came down and yes, we rated this low right here, filled this little hourly fair value gap that we had created. If I go on lower time frames, yep, this 45-minute, right? You can see we came up into that. We could still possibly come lower into this area down here, right, as well as this fractal wick. We want to see price again manipulating lows, leaving highs, leaving reasons to continue that bullish narrative, right? If instead it breaks structure with displacement to the downside, then we can start to look, right, for that short narrative from our overall bearish bias, right? Our weekly bearish bias, if this ends up being a then larger time frame redistribution, right, after a supply mitigation or a higher time frame supply mitigation, and we end up distributing to the downside to fill our imbalances down here, as well as our original demand, right, that caused our move to the upside from our overall bearish narrative, then we are looking for price to show that accumulation, leave the lows, continue to take highs, right, as we come up in the range, and then break structure to the downside with displacement. We have our zone of supply, right, and then we can look to continue to take that to the downside from our overall bearish narrative. Now, if the weekly is bearish, right, how are we going to confirm that with our daily structure? So go ahead and bring this back again. Are you still in those shorts, Joe?
Holy shit, it Sir trades a lot.
He made it back.
The boy is back.
The boy is back. I'm excited. I was missing them handshakes, man.
The boy is back.
I'm telling you. Yeah, let me go ahead and get rid of this for all you guys, and then we'll look at the daily as well. All right, but we need our daily structure to show that bearish displacement to the downside, so then we can look for trades to the downside, right, from our weekly to then our daily, 4-hour, 1 hour, all the way down to right? 1 minute and even seconds. So that's Bitcoin and ETH. We're going to go ahead and take a look at XAU now, get into our narrative as to what we are expecting, right, for price. As we have been going across these couple months, right, across these couple weeks for gold, and then we'll look at a 1 to 18 long that was hit, right, with Thomas, and I believe a few others were able to get it in Forex chat. Shout out Thomas, that was a good play. But let's go ahead and get into that now. Go ahead and take a look at that. Look at how we can look for the same similar behavior, right? And then we'll go ahead, get into news, and then we'll get into sessions. So XAU, right? Gold, we love her. Very, very manipulative, but if we can understand that continuation theory, right, that price is going to continue to deliver, continue to liquidate, continue to create, right, new demand or new supply, then we can look to enter trades. Now, we talked about, right, over a couple sessions with you guys, as well as on over the past few months, right? The posts that have been coming out, how we got that liquidation rate to the downside, large break of structure to the upside. We talked about that reaccumulation within this area, right? We rated lows, but still respected demand from the most recent break of structure out of the range. And then we continued all the way up, right? We were at this area talking about 1802, right? This was in July, right? We were talking about 1802 in July. Why were we talking about that? Well, we understand that from this liquidation, right, and break of structure to the upside, and that continuation from that, right, we are looking for the high that caused the low overall within the range. So now that we are coming up within the range, right, let's show you the daily chart, because this is where I was looking at it. There are a few things we can do and a few things I'm looking for, right? One, we continue to hold that bullish structure. We continue to rate highs, show a displacement, break a structure to the upside, right? And then we can look for that demand that was created from that to continue to take this to the upside, right? Or we can look to confirm our daily, break a structure to the downside, right? With a displacement, and then the 4 hour, 1 hour, right? All the way down into that narrative that we are looking for, the same thing over and over and over again, right? So we came up into this area, we mitigated the supply from this high that caused a new low. Let's look at our most current structure, look at what we are looking at here. So we talked about this long as well, right? The 32 to 1 short. We came down, liquidated the lows, broke structure to the upside once, twice. Demand was created, right? And then we looked for 1802 here as well. What happened? Price continued to break structure. It caused a new high. So as long as we respected this low that caused this high, we can see continuation upside. We raid lows here, right? Mitigate demand as well as fair value gaps and imbalances. Break structure to the upside. Continue, right, delivering to that 1802 price, that narrative that we were looking for, right, for the past couple of weeks, past couple of months. So once we come up into these areas, this is what we are looking for, right, as far as supply and demand. We want to see the rates to the upside, right, over and over again while we leave lows, because this gives us a narrative that early shorts are being taken out of the trades, right? And if we are shown a displacement after early shorts are taken out of their trades and we mitigate an area of supply, this shows me that algorithmic introduction that I will talk about, right? We need to see those large candles to the downside, something like this that breaks structure. Now, did this break structure? No, it did not, right? Let's look at these lows right here. Do we have any 4 hour, right, zones of demand within this price action right here? No, it is all imbalances, right? We see these lows that are formed, but where is our zone of demand? Liquidation rate to the downside, break of structure to the upside, right? And then we have this, your demand zone, your higher time frame demand zone, right? That institutional candle from that liquidation rate to the downside, that consolidation. Obviously, this is a huge zone, but this is just showing that behavior, right, of what we are looking for. So let's go ahead and go on to the hourly now. Let's look about what price action did when it came up into these areas, what it's currently doing, and what I'm looking for, right? So we want to see those highs taken. We want to see the lows formed, right? Leaving a reason to come down after a structural narrative is built. So within this point in time, right, we can see a lot of lows that are being left. We can start to see the liquidation of highs, right? It's not showing very, very healthy bullish structure, right? When we are coming into these areas, not a lot of imbalances are left or anything like that. What happens? We can just see lows that are left, right? And price just seems to be seeking liquidity and continuing to the upside into this area. Now, what does it do when it gets there, right? I believe this was when the news had dropped. This was 8 o'clock, so if I go on the 15, it's probably at 8:30. Yep, CPI, right? Up into that area. This happens pretty much every time for gold. I'm not going to say it happens literally every time, but it happens most of the time on CPI day for gold. We'll see large spikes either into a zone of supply or a large spike for bullish continuation if we are bullish, right? So what happens is we raid the high, and after we raid the high, we break structure once, twice on the 15-minute, right? An area of supply. Let's look on the hourly. Is now created, right? That drop base drop that caused new lows internally, right? We have to remember this low caused this high, so we could still continue to the upside, right? Overall, if we see a liquidation rate of these lows, if price continues to leave buy side liquidity, right, and a reason to continue higher. Now, we're going to talk about this trade in a second here, but let's talk about the price action, right? We're talking about the story developing a narrative. So once price action came up into these areas, broke structure twice on the 15-minute, right, showed that introduction of supply. If you have your institutional candle, if you want to do some refinement, right, within these areas, you have something looking like this from that supply zone, that hourly candle that we had marked. Price breaks once, twice, right, and then it starts to create some lows. Starts to create some lows right here. But then this is where it gets very interesting, right? Because we have an old demand zone. This was the only imbalance that was left from this low that caused this high. Where's your liquidation rate? Right here. Where's your break of structure? Right here. Where's your candle before that candle? Right here. Your demand zone, right? Where's your markup? Where's that move to the upside? Right? So could it create a higher low and continue? Yes. Am I okay with that? Yes. Why? Because structure is still bullish. We don't have that bearish structure yet, right? To look to get into any trades or anything similar. So price could come down into these areas, right? And continue to the upside. Now this is where it got very interesting because once price did come up into those areas, right? We see that liquidation rate, double break of structure to the downside on the 15-minute as well as the hourly. And then we see that supply zone that is formed from that. Now, let's go back to the hourly to show why price or why I ended up taking profit at these areas, right? And let's talk about what happened there. So we talk about the imbalance, the demand zone that was formed from that. And let's go ahead and take a look here. So we'll talk about session times in 1 minute, right? But this was roughly 2:30, right? 2:45, about 15 minutes before London opened. Started to get some volatility into the market, right? I saw a break of structure on the 15-minute confirming our hourly pullback, right? And then I look to take a trade within this price action on the 15 seconds. I'll show you that once we get into that area. But for now, let's understand what happened. So we broke structure to the downside, right? We have a supply zone that is formed from that, and then we have a demand zone that is now mitigated. So now that price comes down into this area, liquidates lows, so we can see equal lows that are created right here. Let's go on the 5-minute. All right, we can see these clean lows that are created right here. We then see the liquidation rate of those lows, and what happens after? Break a structure. Does it leave imbalance? Yes. Does it leave that area of accumulation? Yes. Does it leave that candle before that candle? Yes, it does, right? That institutional candle, price comes down into that area. Does it raid lows and then break structure to the upside? Yes, it does. Raids lows, break structure to the upside. We're in our trade. Now let's understand what happened, right? Let's understand why I got into the trade at this point in time. So we had that area. I'm looking right on the 1 minute, that institutional candle, as well as that area of demand, that lowest low that caused that highest high. And then we see, right, a liquidation rate to the downside. We create some lows right here, raid those lows to the downside, and then we break structure to the upside, right? Here's your 1 minute time frame showing you that high that caused a new low. After, right, that 5-minute break of structure to the upside, as well as 15-minute overall, to show you that price is now starting to have that markup phase, right? And then once we come into these areas, again, same exact thing. What are we looking for? The liquidation rate of the lows. We're leaving highs, right? And then that demand zone that is formed. So let's go ahead now and go from the 1 minute to the 15-second. All right, now again, let's go ahead and take a look at price action within this area. So this was the candle that was chosen, right? This 15-second institutional candle right here, as well as this candle before the candle, right? The body of this candle that broke structure to the upside. So this is showing me, right, multiple confluences within one area after a break of structure and liquidation and confirmation of our higher time frame demand zone, right? We come into this area, we break structure to the upside. Where's your candle before that candle that broke structure, right? It's right here, present right here. So if you wanted to use this entire candle, you could have. That's completely fine, just risking a couple more pips, right? But I was using the body of this candle due to the fact that this was a reaccumulation as well as this institutional candle that was present right here, right? So price comes into this area, right? We get that break of structure upside, liquidation right to the downside on even lower time frames. Let's go to the 10-second and even the 5-second, see if I can get it all the way back there for you guys. Well, we didn't not want to do that. Well, I guess it doesn't let you take them back now. That's annoying. Okay. So let's bring this back here real quick. Back to the 1 minute. Look where price broke structure to the upside, right? That demand zone that was created. We are now in, right? And then where are we going to target at this point in time? So our first target, right, is going to be that weak high that was formed as well as liquidity. So is there liquidity as well as a weak high that is formed? One, a weak high is formed right here, right, from this low that caused a new high. So we assume this high to be taken out. Is there as well liquidity within this area? Well, right, we see that high that is created right here, relative equal highs, right? That reason for price to come up, that reason after the structural narrative for price to continue that bullish narrative, right? So that would be our first take profit. After that take profit is hit, right, we want to see that continuation of higher lows. And then why am I looking for that supply zone up in the range? Well, now that we have that 15 and that hourly break of structure to the upside, right, that markup, that large bullish move to the upside, we are looking for that overall narrative, even though we are still looking for shorts, right? Hasn't given it to us yet, but we are still looking for shorts. Once price delivers up into, right, that break of structure right here, then we are looking for that supply zone from that high that caused a low. What happens? We come up into that area, right? Into that area of supply, as well as if we go on lower time frames, right? Those highs that were present right here, equal highs, more reasons to come up, right, into these areas. We see the equal highs that are present here, as well as this fair value gap, right, on the 5-minute time frame within our supply zone, multiple confluences within one spot. What happens? We come up into that supply, right? Your 4421 is done. Let's go ahead and take a look at how long this took for our first take profit. Right, at this point in time, at this weak high right here, right, you're looking at an 11 to 1, 10 to 1, 10.85 to 1. We'll just say it's a 10 to 1, round it down. Right, in roughly half an hour, 41 minutes, 10 to 1 on gold, you're good to go. Right, go ahead and walk away from your trade now that that new high is being formed within this range. Now we can hold for those higher take profits, right? Your next one would be then that range high, as well as that liquidity, right? More areas. So next you are looking at a rough 30 to 1, right? And then the final continuation up into that supply zone. If you wanted to hold for these, you could have, right? But I'm just going to do the bottom of the supply zone. No need to get greedy, right? Within a lot of these instances, a lot of these trades, yes, it's very satisfying to hold something for a very, very long time that goes in a very, very long direction, right? But again, we need to remember our rules. We need to know what we're looking for. And we can get into instances where we're hitting for a week every single day, right? And then we're like, well, I know what I'm looking at, right? I know what I'm doing. And yes, that's awesome that you do. That's awesome that you're practicing. But then when it gets to that point to where you don't know what you're doing, you're hit so hard, right, that you are exhausted. You don't want to even trade anymore. You don't want to look at charts anymore. You don't want to talk to anybody who trades anything like that, right? Because you had this whole winning streak, and then all of a sudden that one trade or those one or two trades, right, completely blew all of that work. Now all of a sudden you're like, I don't know what I'm doing, right? But if we follow those rules, that one trade that you lose is not going to blow your port, right? And will it affect you? No, because Your P&L, right, is consisted of wins, losses, and break-evens. It really does not matter if you are right. It matters if you are profitable, right? Casper says that a lot. And also, it doesn't matter catching those huge moves, right? Because a 1 to 10 within this price action within here, right? 1 to 11 within this price action. I mean, that's a FTMO count, right? Or a challenge passed in one trade, right? If you are doing everything up into this point and you get that 1 to 10 in 36 minutes, done, right? You are completely done. Your FTMO is passed. You are now funded and you are good to go, right? So let's understand now that this was 36 minutes, right? And we caught a 1 to 11. So from another psychological standpoint, right? Let's say I'm on the 4-hour chart, taking a short to the downside. I don't want to do all that work up into the time to take that trade, right? All the way to the downside on the lower time frames within this price action right here. I just see this displacement. I see the supply zone that is formed, and I'm going to look to take this to the downside at this point in time, right? And I put my stops over this high, or let's just even make it a little easier, right? Just for the sake of the numbers, right? This 11 to 1 that was hit, I made the same amount of money on this trade right here that is present right here on higher time frames, right? The same amount of profitability within 17 days that I would have had to hold. And are you holding this for 17 days without trimming? Without trimming, are you going to hold this for 17 days? I doubt it, right? I doubt that. If you do, congratulations, but I doubt most of you are going to hold this entire time, right? All the way to this very, very bottom low and then get out of your trade at that point in time and get a nice 11 to 1, right? If you did, congratulations. Really doesn't matter. The point is 17 days, right, of work just to wait because we saw this one break a structure downside, right? And we didn't wait for this price action up within here. We just had limits and said we're good to go. 17 days, you made the same amount of money as you did in 30 minutes just by doing a little bit of more work, right? GJ yesterday. 40 we talked about that 50 to 1. You made 5 times more on a GJ trade within 2-3 hours than you did on this trade within 17 days, right? That's where that mentality comes in, to where it doesn't matter if I catch the big move or not. If I miss it, I miss it, right? Well, we can go look for another one, because if we are even trading the lower time frames, we can still catch these high R&R plays and get into these places where we are completely comfortable. Now, we talked about XAU, what the narrative is for that, what we could possibly be looking for, right? We could see price come liquidate these lows from this low that caused a high right here. If we manipulate highs before we manipulate lows, I will be looking for more downside, that continuation to that overall structural narrative, which is still bearish, right? And then those overall lows, which we can see are being formed within this range right here. So now that we have a reason for price to come down, if everything is given, right, then we can look to take that trade to the downside. Now, again, we talked about if it continued bullish, broke that supply zone, right, then we can look for the continuation to the upside. So there's XAU as far as the narrative goes, as far as the long goes, right, as far as time efficiency goes, because that is what I refer to when I talk about those higher time frame swings with larger stops, right, or not so large stops, right? Doesn't matter if you're hitting, If you're profitable, you are profitable, right? But this is just personally what I like, how I like to approach it, right? So we talked about Bitcoin and ETH. We're going to talk about some news now, my personal thoughts on news as well as fundamentals, and then we're going to talk about session times, right? So as far as news goes, we are looking at, right, XAU. We saw that move on CPI, right? That move up into that supply zone, that large blast. The last CPI was over here, right? This was our last CPI. So again, we can see those large spikes during CPI. Obviously, it doesn't mean just long it. When CPI comes out, you need that structural narrative as well, right? But we can see how news, and personally, this is how I look at it, as a catalyst. Why do I look at it as a catalyst, right? As a reason. And what I mean by this is, how many times on the news have your parents or somebody come up to you and said, oh, they're talking about Bitcoin, and then in the next week or the next My apologies for that. My mic died. I don't know why it does that. But anyway, right, in the next 2 weeks that you are told from your parents who don't know anything about Bitcoin, right, that it was hitting all-time highs or whatever, Bitcoin drops 20 to 30%, right? Is that a coincidence? I don't really think so, right? Because how much of the general population at that point in time is going to look to buy Bitcoin when it is everywhere, when it is advertised everywhere, right? Probably 70 to 90%. Who's looking to short Bitcoin, right? The ones who want that liquidity after the structural narrative is given. So those big guys, the composite operators, right? After they are given that structural narrative as well as that reason, that's why we see all-time highs created and then a large drop, right? That liquidation rate. Because that's what it is, that algorithmic introduction. So if news comes out and it's good, but the chart looks bad, that's on purpose, right? They want you to believe that price is going to continue to the upside based off of news, based off of what somebody on CNN said, right? They want you to believe that price is going to continue to the downside based off of some type of news. This is just an example. After this bearish candle is formed, right? News comes out, this candle is formed, and it's bad news. And they're like, oh no, right? It's going to continue to the downside. But we understand our structural narrative is still there. And then we continue to the upside. So those that were like, well, why did we have terrible news, but we're pumping, right? Structure, it's still there. Smart money is still delivering price action to the highs from our overall narrative and our overall, right, structural formation, which is still bullish at this point in time. So even though this is formed, again, it did not violate this low that caused this high, violate this demand zone, right, that caused this high after a liquidation raid. So we saw the continuation. So that's really what I look for as news. I look for as a catalyst, right? And as well as certain instances to where I can get into a trade based off of news because I understand that there's going to be a lot of volume in the market. What does volume bring? Displacement, right? That brings those large price structures, whether it's upside or downside. Then I can look to get in this trade. What happened during CPI? We rated liquidity. What happened during CPI? We broke structure to the upside. So now I have a narrative, right? Everyone's like CPI was bad or good, whatever it was, right? Within this range. After we rated the lows, left these highs, and then broke structure to the upside, everyone who is trying to either short or long this based off of the news, right, when this happened, have no idea what to do within these areas. So they're either shorting or longing. After this move, right, they get liquidated. They're trying to continue to take it to the downside. Maybe dumb money, right, sees a lower low, lower high, lower low continuation, whatever they're looking at, right? But we understand that from that liquidation rate, break a structure to the upside on higher time frames, as well as that structural narrative and delivery of price action to the highs, then we can continue to look for price to move to the upside. But news is that catalyst, right? That reason for that quote unquote inducement. So I'm not sure how good the numbers were when it came out on July 21st. I don't think it was very good at the time, right? But since it was bad, right, we saw all of these highs created, all of this reason for price to come back up after this liquidation rate to the downside. Everyone was shorting. High stops over this high, right? Stops over this high, whatever it is, and they get completely ran out of their trades. They put their stops over this one, right? They're still holding until these areas up here, until they are liquidated because they're trying to will price into their into existence, whatever it is, right? So now we're going to go ahead and talk about session time. So we talked about news being a catalyst, right? A reason, understanding when price action is going to occur. Now this doesn't mean you don't have to not pay attention to the news, right? Obviously, economic events that are out there in the world are very, very important if you have family, loved ones, or reasons, right, to be able to be on that economic, right, type of distress. But personally, right, as far as charting goes and as far as entering trades go, I'm not going to be looking at any type of news to base my trade off of. Now, if there is bad news, great. If there's good news, great. I'm just looking for the volatility once that news is given, right? So now let's go ahead and talk about some session times. We have about 10 more minutes, so this is perfect as far as session times go. We're going to talk about corresponding pairs, time in the market, time out of the market. What should you trade? What should you not trade, right? How we're going to get into that. So as far as session times go, right, we understand that we have our Asian session, our London session, our New York session, and then the one that no one talks about, right, that little Sydney session. for the Australians, right? But we have our corresponding pairs, our time in the market, time out of the market, and what should we trade. So as far as corresponding pairs go, and when I talk about corresponding pairs with session times, we need to understand logically where in the world this would occur. So let's talk about USD JPY for a second, okay? So we'll go ahead and write down USD JPY. Then we'll understand why we are talking about this. Now, as far as USD JPY goes, we understand it is derived in US dollars as well as Japanese yen, right? So we can look for the most volume, the quote unquote largest moves to come into the market, to come into this quote unquote certain pair, right? Within our New York session as well as our Asian session, right? Go ahead and backtest that for yourself. You can go ahead and look, right, for all of these pairs. And go ahead and check that, right? Check that for yourself and see if that holds true. You can go look at GJ, right? So it moves during Asian session and London session. That's your Great British Pound versus Japanese yen. London, right? And Asian. It's moving during both of those sessions. GBP NZD moves during the Asian session and the London session, right? So now we'll talk about the time in the market and the time out of the market. Now, as far as corresponding pairs go, right, there is a lot of information out there, but go ahead and look at this, right? Go ahead and look at your pairs, look at these, look at the sessions that are within them, right? And understand that if a lot of Japanese yen is being traded, right, more money is probably going to be during the Asian session and during the New York session due to these currencies, right? So as far as time in the market goes, do you have to be in the market during the entire session? No, you do not, right? As long as it is showing up, right? As long as your narrative is still showing up, then there's no reason for you to stay in the trade. Yes, they do overlap. We have New York and London that overlaps, and then I believe it is Sydney and Asia that overlaps. But Asia and Sydney, I don't really show too much importance to as far as trying to get in any trades. But yes, we do have overlapping times. So if we have instances where you have Euro USD, right, and this is why a lot of we see a lot of Europeans and a lot of Americans, right, trade Euro USD due to the fact that we have that London session and New York session overlap. And that's why we see those large moves during the London session and New York session overlap, because both London, right, and New York are focusing this pair, right? More money is going to be within that pair at that point of the time. So as far as time in the market goes, we don't need to be in the market during the entire session. If our structural narrative is given to us before the session, or the session hits and then volume comes in, right, and then that trade happens, then we are in and out of our trade. We are still looking for a structural narrative. Just because the session is there, right, it's only for the volatility. That's what I'm looking at it for, right? When is some type of moves going to occur? Why am I not going to open any trades during lunchtime? Why am I not going to open any trades during 5 to 6, right? Because there are reasons that there's going to be no volume in the market. So why are we trying to will things our way, right? We need that structural narrative to come to us. So as far as time in the market goes, we do not need to be present for the entire session. Right? If you are a scalper and you like to trade the entire session, it's completely up to you. I'm not telling you not to be present for the entire session, right? I'm just giving you advice as to how we can be at the computer every single day at a certain amount of time, right? You can find your one pair, find the one pair that moves during a certain amount of time, and now this is a job. Now this is boring. This is good, right? Because now you're taking away those emotions of, yes, I made a lot of money, yes, I did this or didn't do that, right? You're taking all that away. You're making this a job. You're showing up at a certain time every single day. You're looking for the same thing every single day, and you are managing your risk, right, the same way every single day. You're making it boring, you're making it a job, and you're making it secure, right? You're starting that longevity now. You're starting to get that role where it's completely fine if you miss 2 or 3 trades, because you're not thinking about that, right? You're thinking about what's happening within the structural narrative, how price is delivering on the chart, and not how much money you made or lost. So as far as time in the market goes, we do not need to be present for the entire session, right? I just look for the session's opens for the volatility to come into the market, as I was talking about. And as far as time out of the market goes, from 5 to 6 p.m. Eastern, we have spread hour. When liquidity providers are moving money around, we're not going to be looking to take any trades or open any trades right before then. The reasoning for that, right, is obviously no liquidity available within the market at that point in time, so it's going to be very, very choppy, as well as you can have gap ups and gap downs with forex and these indices, right? We don't want to get into those situations to where I set a trade and I set a stop loss right before spread hour happens, and then it literally gaps above or below my stop loss, right? And now I am screwed. We don't want to get into those trades. So we need to be smart, knowing when to stay in the market and when to get out of the market. Now, as far as time on the market goes, we talked about 5 to 6. And then what should you trade? Now, this is just going to be a general thing for everybody. But go and back test 2 to 3 pairs, right? 3 at the most. And this is what I recommend for everybody, right? And learn those pairs. Start trading those pairs over and over, because the amount of behavior as far as structural delivery goes that you will learn from those is going to be 10, 20 times greater just focusing one pair, playing it up and down, right? Side to side, trying to understand what it's doing is going to give you that ability to read charts 10 times better. And then now all of a sudden you have your pair, right? You have your time. You can sit down, done. 1 of 40 for the week, right? You did 30 minutes of work on a Monday. Good job. Pat on the back, walk away. Completely done, right? So what should you trade? That's going to be up to you, up to what is your comfortability, up to how you like to approach charts, right? How you like to get into certain trades as far as either your model goes or this institutional model that we talk about here on stream, right? But as far as what should you trade, it needs to be comfortable for you. I'm not going to force anything on anybody if they do not want to trade that, right? Because what is the point? What is the point of doing something that is completely uncomfortable if you have this system that you can hone in, right, and continue to trade that? So as far as time out of the market goes, I'm going to go ahead and put down spread hour. And then obviously, what should you trade, right? That's just going to be that general, whatever is comfortable for you. So with that being said, I do appreciate everybody that popped out tonight. Listen to me, right? Blah, blah, talk about session times and news and all of these things, right? But we are getting this education. You guys are getting this education. Again, I appreciate everybody for joining. I appreciate all the feedback that you guys are giving me. And as far as everything goes, right, for the future, for the YouTube and all of that, right? Very, very excited for how I'm seeing you guys present your charts, right? Present your plays and start to get into that job mindset, because it doesn't matter really in the end how much money we made if we are not profitable, right? You could have made $200,000 in a month, but if you're not profitable, you're going to lose that. You will lose that. It doesn't matter. You can win the lottery, but if you can't manage risk, you're going to lose that, right? It's the same type of narrative, that same type of logic, the idea that we are trying to express. So again, with that being said, thank you guys very, very much. This was recorded, will be posted to the YouTube. I'm going to go ahead and look to see if there were any questions. I don't believe there were any more. I think we answered all of them for the night. But again, thank you guys very much, and you guys have a great night.